Who would have guessed that NIO would one day compete with Tesla? Certainly not Elon Musk himself, and neither the Chinese company. Well, we all know that these two EVs are in a brutal battle with each other. However, if you want to better understand what's going on in this industry, make sure you watch the video all the way through the end. And you'll see why I said NIO has a lot of business potential based upon the predictions that we're going to discuss right in this video. Which is why we are going to take a look at Tesla versus NIO comparison for 2021. Let's get started without further ado. According to the Volkswagen AG strategist, shares of the world's most valuable automaker believes that a car maker will emerge to take Tesla Inc. and other EV down with the amount of money invested in electric vehicles has risen, which puts them in a potentially jeopardy in the next 5 to 10 years. It could happen sooner rather than later. Every day, Tesla and NIO exchange approximately 200 million shares. However, the stocks are not the same. Tesla, which went public at $17 a share more than 10 years ago, has been through the ringer on Wall Street, while NIO has only been on the market for 2 years. Tesla is a high-grossing corporation headquartered in the United States, and its CEO is the world-famous Elon Musk. At the same time, NIO is a Shanghai-based EV business that, while lacking the same level of fanfare, is heavily backed by the Chinese government. Is that the end of it? No, not at all. There are several distinctions between these two businesses. Let's take a look at them and compare them to see who has the best chance of succeeding. The Tesla Roadster debuted in 2008, followed by the Model S in 2012, Model X in 2015, Model 3 in 2017, and Model Y in 2020, according to a brief history of Tesla's vehicle lineup. Tesla also sells solar panels and solar roofs for energy generation on batteries for stationary storage in residential and industrial buildings, as well as utilities. With 367,656 vehicles delivered globally in 2019, Tesla produced 499,550 vehicles in 2020. In comparison to the EV, Shanghai-based EV maker NIO continues to attract investor interest thanks to strong earnings growth. NIO is a luxury electric vehicle manufacturer in China. The company creates, produces, and sells electric vehicles that are both smart and luxurious. These fuel advancements in next-generation technology, such as networking, self-driving vehicles, and artificial intelligence. On November 17, NIO posted above consensus third-quarter performance, rounding out its 2020 earnings. The company's sales increased 146.4% year-over-year and 21.7% sequentially to $666.6 million. This compares to $262.47 million in revenue a year ago. Close went on a roll in 2020, more than doubling EV revenues and bringing the company back from the verge of bankruptcy. It has made a good start to the new year by introducing its first electric sedan and racking up a strong January sales report. On the 8th of January in 2021, NIO's stock price topped the 57.3 cut buy limit. Stocks at 66.9 on January 11th of the year 2021, on which people spent money like water. A more recent breakout has caused the security analyst to sound an additional alert, resulting in double-digit gains for the price. According to a piece of scientific evidence written by a monkey on the inside, almost half of investors and traders, 48.4%, think that NIO stock price growth will outperform that Tesla by 2022. Based on responses from the study, it appears that many investors believe that in the current climate, electric vehicle manufacturers have a lot of promise for the future. A more powerful version of the NIO battery, with a total capacity of 150 kilowatt-hours, is expected to be available soon, which will bring the 900-kilometer of range to a close. The next iteration of NIO's new driver assistance program, called version 2.0, will be likely to use LiDAR technology. Overall, considering the stock's rise from $17 to $43 over the past year, its current price of $41 still seems to be well-founded and priced in, with respect to the market, which is why many on the exchange view Tesla to be ready for a breakout, and why the higher street believes it is all set to rocket. In a note released today, Morgan Stanley analyst Adam Jonas reiterated his bullish rating on Tesla to $810, raising the target price to reflect an upside of 16% from here. Before the end of 2020, Adam Jonas published a negative alert in December that also predicted Apple's entry into the electric vehicle industry. As opposed to the issues it had when it started, Tesla is currently struggling with a new set of problems. We remain very confident in our assessment of Tesla's ability to surpass the entire EV sector over the next year, based on analyses that indicate a more than six-fold increase in quarterly sales, quarter over quarter, from 2019. Several high results lead indicators to suggest Tesla is substantially undervalued, but it appears that the market has come to the conclusion that Tesla will perform at lower expectations. Tesla's business model would produce recurring mobility revenue at a faster pace and at a better return on investment than their competition, according to the firm. Since it was the calling of Jonah that said that Tesla has the best internet business prospects in the sector with regard to electric and autonomous vehicles, the electric vehicle industry is a very hard one to crack. Without doing so, the necessary work will remain out of reach at $810. To put it another way, it's a certainty, which therefore, what this implies is that both these animals have a lot of long-term viability as potential to be instrumental in the electric vehicle production because they have already established themselves in the market. Regardless, if I had to choose only one to buy at this price and carry for the entire year of 2021, it would be Tesla. Everyone's money is on Tesla being near the top. This is exactly what everyone has been doing at the start of the video. Why do you inquire? The $2.6 billion win force for NIO was the right step at the right time, and stock markets exist to allow businesses to raise capital to continue expanding. Yes, to pay $39 per share, which was a reasonable price at the time, and more than 7% below the market average. In 2019, Tesla raised $2 billion on shares priced at $767, as well as $2.7 billion in a secondary offering and bond issuance. And how about Tesla's September SEC filings, which stated that the company will sell more shares at market rates from time to time to keep raising cash? It should be obvious by now that it's time to go over the latest Tesla news. Tesla is not short for EV, as you might have learned many times, regardless of how many times Musk smokes about other competing EV emerging firms. Tesla is about to face some intense competition, as evidenced by the demand in products currently on the road. This may have an effect on their stock success in the market. Tesla, according to a November report from Roth Capital Partners, is an umbrella stock that is linked to all other names in the market. Complete electric vehicle sales in China have exceeded forecasts, the jump of more than 150% to 169,000 units in November 2020. Though Tesla is the market leader in the United States, it only sold 21,600 units in China, a sliver in a crowded area. Musk will have to work hard to make Tesla more appealing to the Chinese market. Furthermore, Tesla's raw China growth rate of 45% more vehicles sold than the 15,000 cars it sold in June 2020 may be remarkable. Even so, when the stock is worth more than $600 billion, it's difficult to get excited about an insufficient 6,000 more vehicles made after 6 months. Tesla, on the other hand, has a chance to develop on Chinese soil because the NIO's growth is coming from a smaller foundation. So far in 2020, NIO has only sold 36,700 vehicles in total, but that's more than 110% higher than the previous year's total, and the company is spending heavily to keep demand ramping up. Though Tesla's expansion in China must be seen in the context of a well-established multinational corporation with operations in the United States and Europe. With strong government support, NIO will directly capitalize on China's potential. If you remember back to the early days of Tesla, the EV manufacturer promised that 30,000 deliveries will rise to 300,000 in just a few years, and NIO appears to be making headway. This indicates that Tesla will face significant challenges, with the potential future favoring NIO. As a result, for many investors looking to cut through the noise and play China's growth potential, NIO is a viable choice that avoids some of the hype that surrounds Tesla these days. So what do you think about this? Do you think NIO would be able to surpass Tesla in 2021? Or is Tesla going to change the perspective of EV enthusiasts by giving NIO a challenge? Will this year become the best battles for EV manufacturers? Let us know down in the comment section below. If you enjoyed the video, make sure to give it a thumbs up and subscribe to the channel. Also, don't forget to hit the notification bell so that you always stay updated regarding our new videos whenever we release them.